Why is Egypt still posting a record current account deficit despite efforts to stabilize the economy? We'll be answering that question in the next hour. Hello and welcome to Global Business Africa. This is your half-hour fix of all key business news stories you need to know about from across the African continent. I'm Raman Yang in the Kenyan capital, Nairobi. There's lots coming up. Doing business in Zimbabwe amidst a depressed economy in 2014. And we'll be looking at Congo-Brazzaville finally getting its own brewery. Let's start in East Africa. Headline growth slowed down to 5.5% in the third quarter of 2014 due to a sharp drop in tourism, in the wake of a string of terrorist attacks right across the country. Now, the East African nation did, however, benefit from a fairly robust performance from the construction and the agricultural sectors. The National Bureau of Statistics said construction grew by 11% in the third quarter of the year compared to a year ago. Financial services are up 9.9%. Agriculture was up by 6.2%. Tourism, in contrast, however, that was down. It actually shrunk by 14.6%, affected, of course, by a combination of the deadly attacks that have targeted holiday destinations like Mombasa and Lamu, which prompted some Western countries like the UK to warn their citizens against travelling to the country. The Finance Minister, Henry Rotich, has said that infrastructure spending is expected to boost economic growth to about 6.5% next year. In the meantime, though, inflation in the country continues to drop, down to 6.02% in the year to December from 6.09% a month ago. That is the fourth straight month of decline. Also in Southern Africa, Zambia's economy grew by 6% in 2014, and it is expected to grow by 7% between 2015 and 2017 on an annual basis. The Finance Minister, Alexander Chikwanda, has said the government also intends to resolve the issue of VAT refunds with mining companies. Africa's second largest copper producer is withholding $600 million in VAT refunds, which are due to mining firms. The government says it will only repay that cash when companies produce import certificates from destination countries. Mr. Chikwanda also insists that the government will implement a new mining tax regime from the 1st of January, which the industry says it can ill afford. Zambia increased open-pit mining royalties to 20% from 6% and underground royalties to 8% from 6% in the 2015 budget, a move that mining firms say could lead to the loss of some 12,000 jobs. Now, then, industrial customers in South Africa say they've seen quite a few cost savings in their power bills as a direct result of Eskom's energy efficiency program. The utility has pumped $500 million into its integrated demand management program in the last decade. Not only has that allowed users to cut back on the amount of power they use, but they've also gained incentives for their contribution to the national grid. Sumita Naidu has the details.
It's been a dark December for South Africa as Eskom battles a power crisis with widespread load shedding. Industrial customers too are having to bear the brunt of a meager power supply.
This thing is affecting our GDP also. We cannot sell more cement. That's a simple arithmetic in terms of economic scales. And then further to a worst case scenario, we might even have to face job losses.
PPC is the largest cement producer in southern Africa. Cement production is highly energy intensive, from the mining of the limestone until it is bagged for delivery. Electricity alone accounts for 40% of the company's total expenses. Since 2008, the company has implemented programs to optimize energy usage, which includes integrated demand management projects.
We've been able to keep on running, we've been able to keep on producing, and we've been able to minimize the lost production that we have. But that is because of the nature of the cement business and not necessarily because of the severity of load shedding. We are able to compensate because of the systems we implemented.
PPC spends around $30 million on power annually. Since being on the IDM program, which ensures optimum use of its operating equipment, it has managed to save about 3.5% in electricity consumption.
We've implemented what we called a simulation and control system. We can determine exactly with all the, let's say all the parameters of the system, what the best time will be to switch on and switch off certain equipment. And by doing that, we can then schedule the use of the equipment in such a way that they use the minimum amount of energy in the peak periods.
PPC is also heavily involved in infrastructure development in Africa's #2 economy. The regular power outages also causes delays in cement delivery and completion of infrastructure projects.
If South Africa doesn't grow, South Africans don't build. We don't have money for infrastructure, that means we don't sell cement. So the energy crisis in South Africa will have a severe long-term impact on PPC as a company, mainly because the infrastructure market will be depressed.
Running energy-efficient programs without the help of Eskom can be very expensive. With a 12.69% increase in tariffs expected next year, it's going to get tougher, especially for companies like PPC. Halting the IDM initiative at this stage is also likely to erode any power and cost savings made thus far. Sumitra Nadu, CCTV, Johannesburg.
Let's take it to West Africa now. A court in Senegal has rejected a bail application by the son of the former president, Abdoulaye Wade, who's accused of corruption during his tenure as a minister. The Special Court on Illegal Enrichment said it was turning down the request by Mr. Karim Wade on grounds that it could risk disrupting public order and lead to the possible intimidation of witnesses. Now, the head of the court, Henri Gregoire Diop, said that Karim Wade had not yet confronted any witnesses or detainee linked to the trial. The former president's son is alleged to have illegally acquired companies and real estate worth about $240 million. He's been in custody in Dakar since April 2013. 10 people have been charged in this case, but only Wade and his co-defendant Mamadou Pouye are still in detention. During his time as minister, the younger Wade was often criticised for alleged mismanagement of public resources. Right then, into commodities now. Brent crude has fallen to a 5.5-year low, around $57 a barrel, as a global supply glut continue to outweigh concerns of lost supply from Libya, where fighting militias have essentially shut down ports altogether.
They are the kind of pictures that once would have sent oil prices surging. Storage tanks ablaze on Christmas Day as rival factions in Libya fight over Cedar, its biggest export terminal, evoking a strong warning from Libyan oil minister a few days later.
As Libyans, we fear for ourselves as well as for the Arab nations around us and the international community if extremist terrorist organizations reach the oil wells and the revenues that come with them.
Libya has Africa's largest oil reserves. The struggle for their control has cut Libyan production to less than a quarter of what it was before the civil war. But markets in Europe and elsewhere simply shrugged off the latest news. Brent crude prices continued their slide to under $57, a 5.5-year low before recovering slightly. Global oversupply is the main pressure, in large part thanks to the US shale industry. But that's aggravated by the slower global growth and OPEC's decision in November not to cut output. There's no sign of any change of heart, says IG market analyst Alicia McCaig.
Every single soundbite that we've heard in the last couple of weeks from OPEC oil ministers in the Middle East have very much been along the lines that supply, certainly from Saudi Arabia, will be maintained. If demand picks up, Saudi Arabia feel confident that they will be able to meet any excess demand that might materialize. And it doesn't give any cause for an instant bounce as far as the spot prices are concerned.
But the price bulls have one hope.
The one issue that hasn't really panned out, of course, has been the, relatively speaking, mild weather conditions that the European arena has seen over the last quarter. And if we were to finally see a bit of a cold snap, that might start to tilt the balance as far as demand is concerned.
Spain, too, has a new 5.5-year record of its own. Latest inflation numbers show prices are falling at their fastest rate since mid-2009, mostly as a result of cheaper fuel. That's good news for consumers, not so good for European Central Bank, for whom deflation is almost certain to be 2015's #1 challenge. Noel Makugu, CCTV.
Let's head over to Egypt now. The current account there recorded a deficit of about $1.4 billion in the third quarter of 2014. That compares to a surplus of about $600 million this time last year. According to the Central Bank of Egypt, foreign direct investment into the country was up to $1.8 billion net in the same period compared to $1.25 billion last year. Arab Gulf countries, Saudi Arabia, Kuwait and the UAE especially, have supported Egypt with aid in cash and in kind worth billions upon billions of dollars, especially after the former army chief Abdel Fattah el-Sisi became president in June. Mr. el-Sisi has introduced a raft of economic reforms that have somewhat revived economic growth in the country and landed Egypt in the good books of the International Monetary Fund. Right then, relatively thin trading in several of the markets we do track here for you. That was pretty much a case over in Kenya. It ended the day higher by about 0.8, but equity turnover was down 50% compared to where it was a day earlier. Nonetheless, a day of gains across the board, except for the JSE All Africa Index, that was down by 0.9. Lower oil prices and a raging insurgency are dimming prospects for Nigeria in 2015. And after a gloomy 2014, what does the next year hold for businesses in Zimbabwe? We'll tell you next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But el-Sisi told government he wants to control the prices promptly before people's patience runs out.
Welcome back. You're watching Global Business Africa from the Kenyan capital, Nairobi. A couple of minutes ago, we looked at the latest current account data coming from Egypt. Some headline numbers for you. The current account deficit, $1.4 billion in the third quarter of 2014 compared to a surplus of about $600 million in a comparable quarter last year. Let's get you some analysis on that. Katie Gregory is live in London tonight with some more insights into that data. Katie, how do analysts on your end expect the fall in oil prices to affect Egypt's current account deficit in the fourth quarter?
Well, Egypt, as we know, is a major net importer of oil, which means we should see a low in oil prices actually benefit the country's economy. Egypt increased petroleum prices in the summer, saving about $6 billion of its $17 billion annual subsidies expenses. So that means if the current prices remain steady throughout the financial year, Egypt could save over $4 billion more added to that. But you can conclude from that unfortunately the slump in oil prices won't reach consumers. The country will be paying less to bring it in, but keeping prices at the bowser reasonably high because the government then intends to keep the difference as surplus in the budget. Overall, though, there are many positives to be taken from Egypt's economy. Foreign debt investment in Egypt rose to $1.8 billion in the same period compared with $1.246 billion a year earlier. Tourism also recovered from a particularly poor period last year when Islamist President Mohamed Morsi's ousting was followed by those weeks of violence.
Indeed. The decline in net official transfers, however, that also did contribute to the current account deficit we're seeing in the third quarter. What's the outlook for aid from the Gulf states to Egypt in 2015, if there is any aid at all?
Yes, basically aid in terms of financial payments from Gulf states was all received in Egypt's fiscal year of 2013 to 14. So that's definitely contributing to why we're now seeing this deficit now, as opposed to the same time last year when the country had around $610 million surplus. So soon after the army ousted Morsi in July 2013, Saudi Arabia, the United Arab Emirates and Kuwait pledged over $12 billion in loans, grants and oil products. As I mentioned previously, all those positive signs in Egypt's economy are pointing to it standing more on its own now going into 2015. Despite this deficit of $1.4 billion. But Egypt's finance minister has been cautious. He's foreseeing that the budget deficit will rise again this fiscal year. He's also said he's not expecting any of the financial aid from overseas that has helped contain the gap in the previous year.
Indeed. Finally, Katie, there's been some concern that the fall in oil prices overall will affect the flow of aid in cash or in kind to Egypt from its benefactors in the Gulf, Saudi Arabia, Kuwait, the UAE and so on. Are these concerns in any way justified?
Well, certainly. I mean, the fall in the oil price is bound to mean that neighbouring countries will be reluctant to offer any financial help if it was indeed needed by Egypt in this coming fiscal year. They have already begun moving from pure financial support to investments, which is expected to freeze if the low oil prices are sustained. They'll obviously be under pressure to look after their own economies first and foremost, before then assisting others like Egypt. But a good sign for Egypt's economy was that they were able to repay $2.5 billion in November that Qatar had deposited during Morsi's presidency to prop up Egypt's hard currency reserves. So Egypt has been putting in place a series of economic reforms since that unrest, which have seemingly gone smoothly, but they're still not ruling out asking for more help again if they need it to prop up the economy.
Indeed, and certainly, and we've been seeing a bit of a rapprochement between Qatar and Egypt. Katie Gregory live in London. We'll be there for the time being. Let's take you to Nigeria. Early 2014, April to be specific. It vaulted right past South Africa to become the biggest economy on the continent after the conclusion of a long overdue rebasing exercise. Now, despite its GDP being a fairly impressive $510 billion, don't let the numbers fool you. Nigeria still faces a huge number of challenges, as Deji Badmus reports.
When Nigeria announced it was finally rebasing its GDP, economists in the country felt it was long overdue, coming some 13 years after the last one was done. Analysts had predicted the new rebased figure was going to make Nigeria the largest economy in Africa, but no one could tell for sure what the exact figure would be. When Nigeria's Statistician General eventually released the rebased GDP figure, it was $510 billion, surpassing expectations, but sparking fears the huge size of the economy could stagnate growth in a country that had consistently averaged a growth rate of 6.5%.
The bigger the economy in the real sense of it, the more difficult it is to move at a very high speed. We should in fact, as policymakers, should look very closely at China, because China is one big economy that has been able to perform, let me call it that miracle, of growing fast in spite of the size. So that really is the greatest challenge in the outcome of this rebasing.
If there's one thing the new GDP figure has done for Nigeria, it has forced investors that would have otherwise ignored the country to have a rethink. And despite the country's security challenges, the government says investments are pouring in.
We've had companies like Lafarge, for example, investing more than $100 billion in Gombe, for example. We have firms like companies, investors like Dangote, investing heavily in sugarcane to sugar in most of the northern states, in Taraba, in Adamawa, in all those, at least 5 of those northern states.
In spite of the investments in new GDP, Nigeria still has one of the highest unemployment rates on the continent. The scale of the problem was clearly demonstrated when in March this year, 6.5 million job seekers turned out for a recruitment test for just 400 vacancies in the Nigerian Immigration Service. About 16 persons died following a stampede during the exercise.
If investors will come into Nigeria, we should begin to look very closely at the number of jobs the investments we create, and not just in the quantum of investment, and not just in the fact that, yes, they brought in money. And so we celebrate Nigeria as attracting the largest volume of foreign direct investment in Africa, which of course we have attained since 2009. So we have to look beyond that and begin to look at how these investments will begin to create jobs.
For ordinary Nigerians, it is difficult to understand how their country could be rated the biggest economy on the continent and still fail to provide them with jobs. It's a contradiction they are struggling to come to terms with, and the harder they try to understand it, the more confusing they get. More than anything else, the job crisis here remains the biggest challenge confronting the government. Deja Badmos, CCTV, Lagos, Nigeria.
Now, Nigeria, of course, wasn't the only country that was not only revising its economic data, but throwing up a whole bunch of confusion in the process. Kenya, Tanzania and Uganda, they're all in the same boat. Kenya's GDP was 25% higher at the conclusion of its rebasing exercise in September, $53.3 billion, at $53.3 billion, retaining its position as East Africa's largest economy. It's now the 9th largest in the continent. Tanzania, 32% higher at $41.33 billion, and Uganda, 13% larger at $25 billion. Now, these numbers include data from previously excluded sectors like ICT, mining and manufacturing, all of which have grown quite significantly in the last decade and a half. Kenya effectively became a low-middle income economy as well, with a per capita income of about $1,200. The rest of East Africa, however, still firmly classified as least developed economies. Now, with a couple of hours to go to the start of the new year, businesses in Zimbabwe are counting the costs of a fairly depressed and gloomy 2014. For What's Hot Tonight, Farai Moktoya spoke to some entrepreneurs down there about the challenges they've faced in 2014 and what they expect in the new year.
It's been the same old story for the better part of 2014. Erratic power supplies, shortage of capital, and more companies shutting shop than those starting up.
That deindustrialization has pushed many of the jobless onto the streets to try to make ends meet.
They have joined the growing band of informal traders who, by their sheer numbers and volume of business, are the mainstay of the economy now. But this shoe vendor tells me 2014 hasn't been a walk in the park. This time last year, Doba sold 30 pairs per day. This festive season, he's been lucky to sell just 6. Across town is Harare's automotive district. Zimbabweans import thousands of cars every month, so it's a hive of activity here. But there is one problem. The invoice books are full, but the bank accounts empty.
We have been supplying car parts, but the payments have not been coming. There is no cash in the country.
The economy is set to grow by a modest 3.1% in 2015. Government spending will continue to outstrip income, and the vast majority of it will be on salaries. The net result? Precious little stimulus funding to get the economy going. That means the supply-side problems that have bedeviled big business this year will persist, and the fallout will spread to the emerging economy too.
Most leather producers have shut down in Zimbabwe, so we have to get leather and other materials from South Africa. So that's another challenge to add to those we already have.
The government has said it will aggressively pursue an ambitious economic recovery plan that promises more jobs, but it requires billions to implement. If it succeeds, it could make a world of difference for people like Doba, who can't say what the new year has in store for them, but still remain hopeful.
2015, given the problems we now have, it's hard to even think about 2015, but all we can ask for is God to do something for us.
Farai Moktoya, CCTV, Harare, Zimbabwe.
Right then, after a bit of stability around the $60 a barrel mark, oil is firmly heading south again, this time $57.50 on Brent crude, and some do expect that US crude, WTI in particular, could actually crack the $50 a barrel mark sometime in the next couple of weeks. Certainly interesting developments on that front. Not much else happening on gold, cocoa and coffee, positive gains on those commodities. We'll be in Congo-Brazzaville next. The country's gotten its own homegrown brewery. We'll be looking at the details next.
lived in 4 different African countries, and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Welcome back to the program. You're watching Global Business Africa. Now, a new brewery that has just opened up in Pointe-Noire in Congo is rapidly becoming a household name in a country that previously had to get its brew from either Rwanda or the Democratic Republic of Congo. Bralico Brewery produces 3 different brands which have proven to be fairly popular among their clients. Mahia Muto has that story on Grassroots tonight.
The new brewery by Bralico, Brasserie and Lemonade Congo Industries is set to change the dynamics of the beer industry in Congo. The new firm has customized its products according to the needs of its customers. The brewery is already the 3rd largest brewery in the Congo after Congo Breweries, which has 2 processing plants in Brazzaville and Pointe-Noire. It projects production will reach around 1.3 million hectoliters of beer by the end of the company's financial period. At the moment, we have 3 products in the market. They are 3 beer blends, then Zoko, Stack and Skol. So we have 3 distributors throughout Pointe-Noire. The brewery is 3 weeks into production and has already received positive feedback from consumers.
Say thank you to the Congolese state, which we bought this kind of drink. For us, even the son of the country, people drink, they are happy. When I make this drink, I go home without a problem. You eat, you sleep well, you wake up well without problems in your home.
This beer is very modern, so it is consumed everywhere. We believe that the Nzoko beer took the field, and see over there some more photos.
On average, around 25% of the population in Congo consumes alcohol, a trend that is expected to grow with the positive economic growth figures. Mahia Mutwa, CCTV.
As far as currencies are concerned, the narrowing of the trade deficit providing a bit of support to the South African rand. The Kenyan shilling, however, is still showing some holiday weakness at around 90 shillings and 70 cents to the American dollar. That's it for this edition of the program. We always like hearing what you think about what we do around here. Send your feedback to globalbusinessafrica@cctv.com. And of course, when we're not on air, Facebook and Twitter are your port of call. The news continues over there 24/7. Thanks for watching. I'm Ramanya.